Morning, everybody. That tweet has probably got more jargon than I'm comfortable with, because my goal is to try and draw and help new people understand the importance of Bitcoin and some of the political concepts and how it affects different institutions and different organizations in this video. But the video says, just while we're waiting, the tweet says, just while we're waiting for more people to come live, and if you're watching this on either Facebook or YouTube or something else where it was taken off the Twitter live stream, the tweet said the importance and why we need a politically neutral, non-correlated, non-custodial, and I can't even remember the full thing that I said, but it will come to me as I go through this. But we're going to talk about each of these concepts because they really are jargon, and I want people to understand the importance of these things. Oh, of course, the final one was a savings-based economy. Thank you for reminding me of that in the live stream. Saving-based currency. Okay, so you can tell this isn't well rehearsed. This is just me off the cuff and things that I'm thinking about as they come through. But let's start from the very top. So if you think of a currency, it is simply a reflection of a monetary policy of a particular country and how they want to manage and organize that country. And so if you take something like the US dollar, then the US dollar is a great tool that the United States has in order to, one, manage and organize their economy and use the dollar in order to dictate different forces within its economy, and secondly, gain influence over the rest of the world. And so the reason the US dollar is the world reserve currency is because it managed to negotiate itself in a very strong position after the GBP stopped being the world reserve cryptocurrency, the Great British Pound, after the World Wars, and there was a Bretton Woods agreement, and over a period of different agreements and negotiations, it was determined that the US dollar was the most appropriate currency to be the world reserve currency, and it further got influence by pricing gold and important commodities like oil in dollars, and becoming a settlement layer for global trade. What that has meant is whichever country has the world reserve currency can kind of do things that the rest of the world can't do. And so what essentially, things like the US going from, after the last financial crisis, went from $2 trillion of debt to $24 trillion of debt. Had almost approaching negative interest rates or very low interest rates, and just and using that position of being one of the largest GDP economies, but also using the debt position to push Wall Street and the growth of their economy. And the fact that it's the world reserve currency and things like gold and oil are priced in Bitcoin, and US dollar is used as a world reserve asset class by central banks all around the world, and the government's debt through treasury bonds and various other products are denominated in US dollar. It gives the US dollar a very useful status as a currency. And don't get me wrong, even though all of those situations exist, all of the other currencies would kind of go down with the US dollar at the same time, but still, US dollar is still, despite the reckless policies and really bad economics underlying the currency, it's still probably one of the most useful currencies and places to save money in the world. And so people use the US dollar as that. But the point is here that it's not politically neutral. So if you're saving in the US dollar, then you are really making a bet on the US politics. If you're saving in the renminbi or the Chinese yuan, then you're making a bet on China politics, and how they use their currency. Countries like Japan, they often use their currency to get devaluations in order to make their exports cheaper and everybody uses currencies as a political tool. And you have these currency wars where they're either floated against each other, or some people just use a peg, whereby they peg it to the US dollar or something else. And so really what Bitcoin did, it came along and created what was a politically neutral currency. So politically neutral just means it's not affiliated with any particular one country or any agenda. And Bitcoin is one of the only ones. We've had other ones that attempt to achieve that goal. For example, the IMF, the International Monetary Fund, released special drawing rights, and that was essentially pegged to a basket of different currencies, and the goal was to make a more apolitical, currency. But there's definitely political influence because everybody knows the organization behind that, and the people that work for it and the people that are the shareholders and stakeholders are often going to be affiliated with a particular country, and so therefore they might have some kind of definitely some political bias and influence that can come in as a result of the board of directors, the shareholders, the stakeholders, and having necessary undue influence. And people have always criticized organizations like the World Bank for being just a global an organization that's designed to exercise US influence globally, essentially through banking. And so anyway, Bitcoin doesn't have a political preference. Now, it's not completely politically neutral because Bitcoin tends to benefit from other countries' bad political policies. So, Bitcoin tended to benefit when, for example, there was turmoil in Cyprus during the EU crisis, and there was bail-ins, and people, the banks decided to use depositors' money, and that had an effect on Bitcoin because people can own their own money. Things like, if a country is exercising excessive influence and control through things like censoring WikiLeaks, trying to control that by using the banking system and how it's funded, then Bitcoin tends to benefit from being a mechanism whereby these, politically neutral organizations can actually still operate without the support of the banking system or the financial system. And other things like, when India makes some of their cash illegal and forces Indian people to stand outside and queue outside a bank with their life savings in order to not lose all their money, and then they run out of different notes and they're trying to get everyone to digitize their money through the banking system so that they can operate off a debt-based system, then that tends to educate people into why they should use Bitcoin. Or if Donald Trump becomes president and the Mexicans have a devaluation of their currency as a result of some political event that changes the relationship between the US and Mexico, then Bitcoin tends to benefit from those things, and Brexit and China wars and all these other things. There's case study after case study. But the important thing is that everybody that operates within these countries or uses that currency has the ability to exit into the politics or politically neutral currency. And so Bitcoin is although it has a correlation to political events, it doesn't have an agenda to be affiliated with or fulfill the goal of any particular country. And so that is a very important thing. That's the role that gold has traditionally played and other commodities have traditionally played. But we'll get into a different video about the difference between Bitcoin and gold another time, I think. I don't want this to be too long. So that's the first thing. The important part is that everybody has a choice to actually exit the politics of a particular currency. But then that also has its problems. So I talked very much about other forces within that. So the first one was politically neutral. The other thing is non-correlated. So non-correlated is extremely important because what tends to happen is during booms and busts, we're a global world, we're a global economy, And asset classes tend to, either work off a run to cash, a run to government debt through the bond market, or a run to investments in stocks and shares, and obviously other asset classes. And then there's professional money managers that manage that process for you and pull together everyone's pension and insurance money, and university endowments and all sorts of stuff that do all these decisions for you. But what we tend to see is that during the time of a global financial crisis, you might see a movement towards more politically neutral commodities like gold and various other things. But then they tend to have correlations as well with different countries and different things. But the point is to have a non-correlated asset. Now, if in the next few years ahead, or months or days, we don't know when it's going to happen, there is a systemic risk event in the financial system, which is inevitable, predictable, and guaranteed. We're guaranteed to see something like we saw in 2008 because we never fixed the problems with our financial system. And if that has an effect of having a negative effect on the bond stocks and various other asset classes, and at the same time there is a institutional and retail movement towards Bitcoin, where everyday people realize that they might want to have some of their savings in Bitcoin, or they might want some of the freedom that comes with owning a non-political currency, then you tend to get this is what I'm really looking for at the moment, an increase in the price of Bitcoin, a movement towards institutions diversifying some of their stocks, bonds, and commodity exposure to Bitcoin as more institutional regulated solutions come through. So for the retail person, everybody gets the freedom of check out previous videos where I talked about a beginner's guide to purchasing Bitcoin and the things you need to know on my Twitter live stream. And, everybody, all the retail and individuals get the freedom that come with having a non-political everything that comes with that. And then the institutions also have a way of getting a non-correlated asset class. And so as politics gets more and more uncertain, and I think we can agree we live in a world of very big political uncertainty at this stage, especially with a financial system that is patched together after the last global financial crisis. And we have the ability for both institutions and everyday people to easily onboard into Bitcoin, then there's a possibility that we might get a non-correlated asset class. And that means that while during a global financial crisis and recession and everyone is uncertain, we need to know whether people are going to fly to safety with cash, or whether they're going to take a percentage of those assets and put it into something more speculative. Now, traditionally, what has happened during times of uncertainty is people fly to safety. And Bitcoin is definitely not, a safe place, depending upon your perception and understanding of the economics of Bitcoin. Please do check out a video on YouTube that I created called The Economics of Bitcoin. Search for Economics of Bitcoin, Simon Dixon. But people that understand that think it's probably one of the safest places, but the world doesn't know, and it is still, in general, a high-risk, high-return asset class. But if we have that, a flight to safety, and a percentage of the world starts to consider a politically neutral currency as an asset class that is a flight to safety, and we get an increase in the price of Bitcoin at the same time as a general decrease in depressionary or recessionary environment with traditional asset classes, then to me that is the writing on the wall for the fact that Bitcoin is this new non-correlated asset class. So I'm looking for that. If we do get a politically neutral, whereby you can exit the traditional politics of your country through currency controls, and you get a non-correlated asset class, then I think that will be the perfect storm for driving both retail and institutional people towards this industry, this sector. The third one is an interesting one, which is non-custodial. Now, non-custodial comes into force when you have a financial crisis, or cash becomes illegal in more and more countries, which is inevitable. There is a war on cash. Every country wants to get rid of every country wants to get rid of cash. They want to have more control. They want to put it through the banking system, and they want to fractionalize and leverage the people's deposits to try and stimulate growth and employment in their country. But them wanting to do that has a kind of inflationary effect on your savings, and therefore what's good for the country to stimulate growth can often work in opposite to what's good for your savings and drive you towards more speculative decisions. So what tends to happen is the way that governments around the world have managed their currencies is they want to drive people into debt-based products. This kind of goes into the next topic. But that means that if you drive your savings into debt-based products, then that stimulates some growth in your savings, because your money in savings-based products or cash is being depleted away, and you have to work harder and harder in order to maintain a normal family life and a normal savings. So therefore you're driven to speculation, and you tend to move things into real estate, property, various other asset class, stocks, bonds, in order to try and beat the force that your currency is becoming worth less and less, and you have to work harder and harder in order to maintain its supply. But non-custodial comes into force when, through bad banking policies, we either have bail-ins, we have negative interest rates, whereby you have to pay to hold your savings at a bank account, negative interest rates, or bail-ins, whereby you lose your money in order to bail out the particular bank based upon the credit risk and risks that bank has been taking with your money, because when you deposit with them, you don't own it. They can spend it as they choose, and you're really making a bet on their creditworthiness and how they actually issue those loans, and what happens in the in politics as well. If there's one thing that everyone should know, you might not realize that you're a speculator, but everyone is a speculator. If you're holding money in your property, you're speculating on your country and the politics around that. If you hold it in cash, that is a speculation and a bet against a different asset class. If you put it in stocks and bonds, or your pension or insurance, you can either have somebody else make that decision for you, but they are speculating on your behalf. If you invest in real estate, property, or you put your money in Bitcoin, everybody is speculating. It's just different degrees around who is speculating for you, or whether you know you're speculating or not. Most people don't have enough, many people don't have enough savings, and therefore they don't think they're speculating. But the currency they hold their savings with, and any contributions they might be making to their pension, or the currency they're receiving any state benefits in, is a speculation. And you either consciously or unconsciously make those decisions. Either the world makes those decisions for you, or you actually engage in the process and accept that the world is the way it is. We live in a speculative world, and you need to consciously choose your speculations and how you're actually going to manage these political environment. My personal belief is that everybody, and this is not financial advice, you can only do this with money that you can afford to lose. This could all go wrong. Everything I say could be complete crap, and the world can completely change very quickly. However, my personal belief is that every institution and every individual will need to hedge into cryptocurrency, and Bitcoin is the only one that has the properties that I'm sharing with you in this video. And so where non-custodial comes in is when there is excessive risk in having somebody else hold your money, i.e. if you hold it at a bank, their policies are going to determine whether you have that money or not, or whether you can spend that money or not. And so self-custodial gives you the ability to actually own your own money. And that becomes really important as these political forces unwind within your country. So we've got a politically neutral, non-correlated, non-custodial, where you can own your own money. And the final thing is what I call a savings-based currency. Now, traditional money held at a bank or earned from your wages that is denominated in the currency that your country says you have to use and save in, and all the shops around you accept it as a legal tender, is debt-based currency. So people often ask me why I moved away from the UK many years back. I moved to Hong Kong and then I moved to Isle of Man. The reason is because I like to bet on countries that that have showed a historical record of managing debt well. So the worst countries for that are countries like Japan, United States, United Kingdom, that have really built their dominance based upon a debt-based system. And a debt-based system means that essentially their economy grows the greater, the further and further individuals, governments, and corporations go into debt. And what happens is that as the banking system creates more debt through loans, through mortgages, through credit cards, through every type of debt product, through student loans, through every type of debt product, property and real estate being the number one asset class used for money creation through mortgages, it means that the value of that currency has a decreasing effect because they're increasing the supply every time they issue a loan. The debt increases, but if they can sustain that debt and they can roll it over into a new form of debt through financial engineering, through sectors like Wall Street, and financial centers like, in UK and various other countries that have built, very strong in dominating financial sectors, then they can use financial engineering in order to kick the can down the road for as long as they can, in essentially a political environment whereby the politicians want less debt, but they need more debt in order to stimulate their economy. And if they don't stimulate the economy, they've only got 4 years till everybody votes them out for not spending enough. And therefore, politicians are put in, this force whereby they have to always increase the debt every cycle. If they don't increase the debt within their 4-year cycle, then people won't vote for them because they're not spending enough. And you tend to get these cycles that repeat themselves. All of them lead to an increase in individual, corporate, and government debt because money is debt. And if you don't have more money in the economy, then you don't have more debt. And if you don't have that, then you get a deflationary and a depressive environment. And therefore, that leads to the force of everybody having to work harder in order to and speculate harder in order to maintain their savings if it's in the currency of that, because you can just look at the charts. Now, that force cannot be reversed. There is more debt than GDP. So if there is more debt, and there's more debt than money supply as well. So, the money to actually repay the debt doesn't actually exist. So if any politician is committed to paying off national debt, they're essentially saying, I would like a recession and a collapse of the banking system, and then therefore systemic risk on everyone losing their deposits. So it's something no politician can do or achieve. However, there are certain countries so when I moved to Hong Kong, they operate off a surplus because they've got a special relationship with China. China takes on the debt for them, but it's one of the only economies that actually operates off a surplus. In Isle of Man, it's actually legally mandated by government that they're not allowed to borrow money, so they have to make their books balance. The tax that they collect has to actually match the liabilities that the government incur in order to build an economy that they think is right for the people in Isle of Man. So I have tend to always pick these non-debt based economies. And there's not too many of those in the world because the whole world is in debt. And we've gone into a debt-based social and economic experiment we've never seen before. And the day that the governments, the major central banks started using quantitative easing in order to rescue their economies, push interest rates down, and essentially inject lots of money into large corporations, then we reached uncharted territory. And so Bitcoin was built upon simple economics. The simple economics is that no politician, nobody can actually change the money supply. It was created by an anonymous person called Satoshi Nakamoto, some people claim that they are that person. It's an anonymous group of people, most likely. And some of them believe that a bunch of those people are probably dead now, or that has no desire to actually come out as the creator of Bitcoin. So, and, you know, regulators all around the world, like the SEC, have said it's sufficiently decentralized not to be considered a security. And governments all around the world have accepted that there is no creator, there's no door that they can knock on. And essentially it is this decentralized currency that has no that is not connected to any politics, but obviously is affected by politics. And many of the other things that I talked about in this video. So anyway, I've talked for quite a long time, but the design of Bitcoin is whereby the supply of Bitcoins can never change. Every 10 minutes, new Bitcoins get created. There's never been any downtime for, you know, it's been uptime the whole way through. It's backed by people verifying every transaction through computers called miners. And the number of miners and the power behind that miners has become the largest supercomputer in the world, where we've got this one blockchain of truth, which cannot be denied and cannot be manipulated, and would require an investment of billions and billions and billions in order to try and take down, and a simultaneous infrastructure of trying to find all the miners, take them all down at the same time, to the point where no governments are really trying to take it down anymore. They're just adjusting their policies and either trying to compete by creating their own blockchains, or going with it, like countries like Japan, where they recognize that we've got to kind of get regulation so that we can get all the KYC. We can other videos and subjects that I talked about on my previous videos on this live stream. Anyway, the end result is that when you have a fixed money supply and you have an ever-increasing utility and more reasons for people to get in and want to use it for all the other reasons that I talked about in this video, and you have both institutional and retail demand from these different forces, then you're going to have a rarer and rarer Bitcoin and more people trying to get hold of those Bitcoins. And then you've got to try and find somebody that sells them, because eventually the whole supply will be mined. We're between 17 and 18 million of them already. Some estimate that between 4 to 6 million of them have been lost forever, can never be found because they lost their private key. And other videos explain things you need to know in order to store them. Therefore, that trend is only going to go up, you know, there's not many of them left to be created. And so this kind of leads to people talking about, for example, there was a book called The Bitcoin Standard, that when you combine these different forces that I talked about in my way today, you end up with probably the only thing that has the potential to be world-changing and act as a world reserve currency because of its non-political nature, the fact that you can exit from it and hold it in self-custody, the fact that it might be non-correlated to individual countries, and the fact that it rewards the saver rather than the debtor. And that becomes a force that what I call regulates the regulator. And by regulating the regulator, that means to me that it keeps traditional fiat currencies more honest because people have an exit. It keeps regulations more inducive to competition because there's this competitive force that's disrupting many of the different areas of traditional financial products. And we have global competing, organizations, like if Facebook comes along and they want to create a currency competing with Wall Street, where Silicon Valley can try and take on Wall Street, then you have all these competing forces that create for a fairer financial system if you believe in capitalism and that competition leads to more effective policies when competition is high, as opposed to crony capitalism. And so really this is what all of the central banks, investment banks, retail banks, governments, politicians, individuals, and Fortune 500 companies, FTSE 100 companies, Nikkei listed companies, Shanghai Stock Exchange listed companies, and everyone around the world, and islands like the Isle of Man and Malta and smaller countries and Switzerland, and the entire world is having to figure out now how to adjust to these forces. And to me, that is what I call, people always ask me, when will Bitcoin get mass adoption? Mass adoption, I believe, is here right now because every single country, every single central bank, every player in the financial system is figuring out how to adjust to this. And that to me is what I call mass adoption. And other people's definitions of mass adoption could follow as a result of this perfect storm, whereby the economics of Bitcoin rewards the saver, and everything is being priced against Bitcoin, and people start to realize over time, as these forces play out, in my perception, remember, not financial advice, you need to do your own research, and there is a massive element of risk and political uncertainty in these forces playing out. But that is what I believe could end up to more and more people realizing that they need to park their savings with Bitcoin, the currency that allows you to own your own money, spend your own money, hold it in a self-custodial way, is politically neutral and tends to reward the saver over time, and essentially is a savings force sucking out lots of fiat debt-based. An example is where Bulgaria, they seized some Bitcoin from somebody that was using them for nefarious activity. And when they checked their hard drive several years later, they realized that the value of their Bitcoin exceeded the value of their national debt. That is a country that is using a savings-based asset class in order to reshape and transform their country. And I believe more and more countries are going to realize that if I put a percentage of our country's electricity into mining, then I could make a bet with some of our world reserves, of our central bank reserves, and hold Bitcoin. Then there's going to be a theoretical game of chicken, where the smaller central banks are going to become more and more influential as a result of holding this apolitical, non-custodial, non-correlated, savings-based product, or asset class, or currency, or whatever you want to call it. It's confusing because it's so many different things to so many different people. Then they are going to get a head start in the economy, and the last ones that are going to adjust is going to be central banks that have the most to lose. For example, those like the largest and most concentrated, like the European Central Bank, which is essentially is the politics of Germany influenced across the whole of Europe. Or Great British Pound, that managed to maintain its own currency, even though get the benefits from being, trade partnerships and migration partnerships with Europe, and the US dollar and various other countries. Now, Japanese yen is an interesting one because they're adjusting at the fastest pace to this new economy. So that's an interesting one, even though they've traditionally been the highest indebted socialist, one of the most indebted countries. So they play an interesting part in this role, but this is what I believe, both on the individual level, the corporate level, and the governmental level, that we're about to see one of the largest wealth redistributions that we've ever seen for an awful long time, in centuries and centuries. And the reason that I'm live streaming is to make sure that if you believe it or not, at least you're ready and understanding these things before you probably need to understand them, and you can prepare accordingly. So that was a much, much, much longer video, and every single time I say I'm going to do a 5 to 10 minute update, but I just can't stop talking because I think these forces that we live in today are extremely interesting. So thank you for your time. I hope you gained something from this. And I look forward to seeing you on the next live stream. Please do retweet, please do share, please do like, please do make sure that as many people get to see and understand these things as possible, because you might be the person that gets to, help someone and impact their life greatly because something was explained in a way that meant something to them, and they adjusted accordingly, and they became more prepared for whatever might come ahead. Even if none of this stuff comes ahead and governments fix everything and they create greater currencies and greater systems, then great, we can all prosper from anything that comes from that. But at least more and more people were hedged and prepared in a time when they might not necessarily have needed to be. But my fear is that everyone's going to do it at the very moment they need to be, and there's going to be real problems with trying to onboard people into the crypto industry and a mass scarcity of that. So anyway, please do retweet, please do share, and share in the comments anything that you would like to see in a future live stream. I'd be happy to cover different topics, go deeper into certain topics. And I'm now going to get back to work. I'm over and out.